Good morning, everybody. Happy Friday. It's me, Joe Neighbour, speaking on behalf of Signal Centre today on the latest instalment of Talking Bull. A bit later than usual. Apologies for that. So let's get stuck in, shall we, for the last trading day of the week. Okay, so latest headlines. Yesterday, we saw Snapchat produce numbers in their latest round of earnings, and the shares tumbled as much as 27% in extended US hours. The owner forecast a worse Q4 results than analysts expected. It warned that changes to Apple's data collection rules and global supply chain issues are weighing on the advertising spend, tempering its earnings forecast for the fourth quarter. This warning did cast a bit of a shadow over larger rivals like Google, Facebook, and Twitter, who all declined in extended hours trading. The equity indices are on the front foot today, so they are recovering from that blip that we saw late in yesterday's trade. In terms of what's going on with China and Evergrande, they pulled back from the brink of default by paying a bond coupon payment before this weekend's deadline. Bondholders will receive the funds before Saturday, according to people familiar with the case, which is just about to meet its 30-day grace period since it first missed its original payment. Hot on the heels of the latest Bitcoin-linked ETF, we've got a second US Bitcoin futures ETF, which is set to launch today. This is called the Valkyrie Bitcoin Strategy Fund, which will start trading on NASDAQ under the ticker BTF. The enthusiasm around BITO, the other ETF which launched, has helped fuel the world's largest cryptocurrency to an all-time high, with Bitcoin nearing $67,000 on Wednesday. That rally has cooled a little bit yesterday, and prices have dropped back to around about 63,000 in the process. Overall, it was a positive session throughout Asia. We saw gains across the Japanese, Chinese, and Hong Kong, and also Australian stock markets, and that came off the back of this fresh record high in the S&P 500 yesterday. So let's get into some charts, shall we? This is the dollar index that we have in front of you, the starting point for all analysis when it comes to foreign exchange markets. At the moment, this continues to trade within this bullish channel, as is highlighted by these yellow bands. We have seen a pullback to support at 93.43, which is a key level in my mind that we need to hold. It's also going to start lining up with the lower end of this channel very soon. So ideally, we will see some buying impetus reoccur here, but that would signify a shift into more safer haven type trading. So keep an eye on this for now. We are on the back foot again today, but this 93.43 level for me is the key level that participants need to keep an eye on. Over on euro dollar, flip side of obviously what we've spoken about on the dollar index. Yesterday we posted a bearish engulfing candle, as you can see just there, into this resistance level at 116.64. We are pushing a bit higher today, but while below this level, there is still potential for lower prices in line with the short-term trend. If we look at cable quickly, that's pushed through this short-term downtrend resistance line. We've seen a bit of stalling over the last couple of days. Again, I'll reiterate my view on this. I think opportunities are quite limited on this pair at this moment in time. It's quite a difficult market to trade. If we just realign that trend line with this key high that we posted here, you can see there's a little bit of stalling here at the moment. So a little bit confused about which direction that's heading in. I think my bias still remains to the downside with this for now. If we take a look at some of the riskier assets like Aussie US Dollar, that produced also a bearish outside day candle yesterday, trying to get through this key resistance level at 74.78. So we're above it at the moment. Maybe yesterday was just a pullback to sort of confirm whether or not there was support here on offer on a retest of this level following the break higher. At the moment, it seems to be doing a good job, but I am a little bit concerned about that bearish outside candle that we saw yesterday and whether or not we can continue to push higher in the short term. The key theme for me yesterday on FX was with regards to the Japanese yen. Obviously, we've seen extreme weakness in this pair, and it was looking quite looking very strong, but we've seen a number of these pairs rally into some key resistance levels, none more so than Aussie yen into this massive level at 85.80, which is this previous swing high that we posted back here on the 10th of May. Yesterday we posted a really strong reversal candle, a bearish outside day. We made a new high, but then erased all of the gains that we saw on the previous session. So we have rallied a bit today. This potentially could be an opportunity to sell it, in my eyes, into the lows of the previous up day that we saw, and could be a good opportunity to get short. This was also my gun to the head trade yesterday, which we'll come on to in a bit. Looking at euro yen, since breaking out of this range pattern that we saw, it came just shy of the measured move target. Again, posted a pretty ugly looking reversal candle yesterday, and it will be a key test today for the bulls as to whether or not yen will continue to weaken, or whether or not we will see a little bit of a stalling momentum and a retracement on this market. Looking at dollar yen, that rallied into this key resistance level at 114.32, and as previously mentioned, we have to go some way back to find why this level is relevant, back to May 2017. So we've seen a number of tests of this level. This is the latest test of this level, and yesterday again we posted a bit of a reversal following this big doji candle that was formed on the 20th of October. So this is looking a bit weaker today, so potential for a bit of a pullback here, just to really maybe consolidate some of these gains that we've seen following the big and sharp move to the upside in the dollar versus the Japanese yen. So moving on to Bitcoin, as we discussed, that rallied into new all-time highs at above 67,000. We posted a reversal yesterday. There is a bit of strength today, but we do have another ETF launching today. And if the last launch of the ETF is anything to go by, then it obviously did push prices to new highs. There is a resistance level down here, around here, at 64,900. And obviously we've got the new highs that we made as well as a further resistance level, which comes in at pretty much bang on 67,000. So where does it go from here? It is into resistance level. I don't know really what else to say other than obviously overall it's very bullish, but in the short term there could be a little bit of a retracement here. So do be careful if you are overexposed or long of Bitcoin at the moment. Moving on to the commodities. Yesterday we saw oil take a bit of a dip intraday, but the buyers stepped back in pretty readily to buy this. We've got this 10-period moving average highlighted in blue here, which continues to support price. Not really much in the way of a reversal candle yesterday. So overall, it looks pretty bullish still, targeting these resistance levels at 84.99 and 86.39 in the short term. Gold yesterday, pretty indecisive. We've formed a doji candle. We are trying to push higher today, taking out the highs that we saw in the previous sessions. Long way to go before the close of trade, but at the moment it looks to be trading in a very short-term bullish channel. Overall, price action looks pretty choppy for me, so it's quite a difficult market to trade right here, right now. I think if we can get above these highs here that we posted on the 14th of October, then we could see a continuation higher up to these resistance levels at 1834. Okay, moving on to indices. So FTSE 100 is at a key level at the moment. It's failing right now to get above this 72.35 level. It looks as though we're doing a bit of consolidating at the moment, potentially forming a bit of a pennant or a flag, which would have a bias to break to the upside in line with the dominant trend on this at the moment. Now, the FTSE is being held higher by the influence of the oil stocks, BP and Shell, massive constituents of the FTSE 100 and have a huge weighting on the overall index. Also, bank stocks in anticipation of this rate rise that's going to happen potentially on the 4th of November. Which is keeping stocks elevated at the moment. So potential for this to break up. It looks as though we're breaking out of a minor consolidation at the moment. Again, a long way to go on the session, but keep an eye on this. If it does break above this and holds, then you've got to think that we'll be looking for new highs. And in terms of where we'll be targeting after that, if we move this all the way back to the left, we've got some key levels up here to target in the short term, up at these sort of previous highs that we saw back in January 2020, and prior to that, back in July 2019. Looking at the DAX market, that is pretty range bound still, struggling for direction, it would seem. It's trading in a bit of a range. We did see a bit of a push higher in recent sessions, but as you can see over the last 4 or 5 sessions, a lot of indecision in the price, and it doesn't appear to be moving anywhere fast. So maybe limited opportunities on that today. Taking a look at the US markets, what we can see here on the Nasdaq is this bit of a reversal or doji type candle that formed yesterday. Obviously, a lot of that selling came in the extended hours session as a result of the Snapchat numbers, and that having a knock-on effect on the other tech stocks like Google, Facebook, and Twitter. Looking at the S&P 500, that touched new all-time highs yesterday, but then closed, fairly sort of flat on the session. It's having another go at trying to overcome this resistance level here at 45.51. And you'd be a brave man to bet against it, really. There is obviously strong appetite for US stocks still, so higher prices are probably likely here with the S&P 500. So that will be that for now. We will do a more comprehensive view of a lot of these markets next week when Steve's back from his holidays. Moving on to the gun to the head challenge from yesterday. In fact, what I'll do is I'll just bring up the chart of the trade that I did, which was on Aussie yen. So I was selling it here yesterday at 85.50, and we did see a decline intra-session, and at the 9 p.m. close when we cut these trades off, it was nicely onside by about 0.6R. So not a huge win. I was only looking for a 2R outcome on that yesterday. But a win's a win, and we'll take that. And hopefully I can end the week on a positive note by picking another trade now that I think will perform quite nicely between now and 9 p.m. tonight. So just looking at the daily charts again, I am quite encouraged by what I see on these yen charts particularly. I think that's where there is opportunity at the moment. So the rally back today into a resistance level I have here at 85.38 is enough for me to think that this could be worth another shot. So I'm actually going to get back in at 85.47, just a few ticks off where I got in yesterday. I'm going to place the stop above these highs here that we posted on the 21st. And obviously I'm going to have to extend my target now in order to get the risk reward at an acceptable level. So I'm going to target a big move down to sort of 83.05, looking for just under 3R. Obviously it's something pretty big is going to need to happen for that to play out today, but you never know. You've got to be in it to win it, as we say. So that is my trade of the day, selling Aussie yen at 85.46, targeting a move to 83.05 with a stop loss at 86.28. Now, in terms of data that's due out today, we've already had a cluster of PMIs come out from Europe. The French, German, and Eurozone PMIs, they all were expected to drop back slightly, but remain pretty solidly in the expansion territory, i.e. above 50. At 9:30, so just now, we've just had the UK PMIs out. They were expected to fall to 54.7. And at 2:45, we have the US version of the PMIs, which is expected to fall to 54 for the services and to 60.4 for manufacturing. But again, above that key 50 level where we are in expansion territory. Okay, that's pretty much it from me. In terms of the earnings front, I don't think we've got anything particularly large due out today. We do have a number of markets due out next week to keep an eye out for, some of these bigger tech names, and we'll go into preview mode on those next week. That's it from me for the week. Hopefully it's been insightful for you all if you've been watching and you've had a great week trading. We'll be back on Monday with a full complement. Steve will be back from his holidays, and until then, everybody have a great weekend and trade safe today. Goodbye.